There's a new addiction sweeping through corporate America, and it's not stocks or profits or even growth. It's artificial intelligence. From retail giants to banks to car makers, every company in the S&P 500 is trying to convince investors that it has an AI strategy. And Wall Street can't get enough of it. Just look at what's happening in the markets right now. Mentions of AI in corporate earnings calls have surged more than 250% this year. Companies that announce AI initiatives see their stock prices jump overnight, even if those projects are still in the idea stage. The AI boom isn't just changing technology, it's changing the psychology of the market. Investors are rewarding future potential over present profit. It's the same kind of fever that fueled the dot-com era. Only this time, it's not about websites. It's about algorithms, automation, and data. And in this new Wall Street reality, every business, no matter what it sells, is suddenly being judged by how AI-ready it looks. Let's break that down. Take Walmart, for example. It's not a tech company in the traditional sense, but that hasn't stopped it from diving deep into AI. Walmart is partnering with OpenAI to create conversational shopping assistants powered by ChatGPT. These systems help customers find products, build shopping lists, and make recommendations in real time. Behind the scenes, Walmart's logistics network now uses machine learning to forecast inventory and manage deliveries more efficiently. Investors love it. The company's AI announcements helped push Walmart stock into new buy territory this fall. Proof that even the most traditional retailers can win Wall Street's confidence if they sound like tech firms. Next, look at JP Morgan Chase, America's largest bank. It's been quietly hiring thousands of data scientists and AI engineers, not just to improve trading algorithms, but to automate compliance, detect fraud, and handle routine client communications. CEO Jamie Dimon even said recently that AI will be as transformational as the printing press. When a banking giant starts talking like a startup, you know something big is shifting. Even industrial companies are getting caught in the wave. Caterpillar, General Electric, and Deere are embedding AI into heavy equipment using predictive maintenance software to keep machines running longer and cut downtime for clients. Their goal isn't just to sell products anymore, it's to sell smart systems that think, analyze, and learn. That's the new playbook. Take whatever business you're in and add AI. The results have been dramatic. The so-called Magnificent Seven, Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and Tesla, now account for over 30% of the S&P 500's total value. But what's more surprising is how their AI gravity is pulling everyone else into orbit. Energy companies are using AI to predict power demand. Airlines are using it to optimize flight routes. Health insurers are using it to detect fraud and analyze patient data. In 2025, if your company doesn't have some kind of AI narrative, you risk looking obsolete. But here's the question. Is this transformation real or is it hype? The answer is both. AI really is revolutionizing business operations. But it's also become a buzzword that executives throw around to keep shareholders happy. Analysts joke that saying AI on an earnings call is like sprinkling magic dust on your stock. Sometimes it works, sometimes it doesn't. Still, beneath the noise, real change is happening. Automation is cutting costs. Predictive analytics are helping companies make better decisions. Generative AI tools are creating ads, writing code, and drafting legal documents in seconds. Entire departments, from HR to marketing to logistics, are being re-engineered around data. And Wall Street knows it. That's why investment banks are racing to identify AI winners. Goldman Sachs now tracks how much AI exposure each company has, ranking firms based on their digital transformation spending. Morgan Stanley publishes AI readiness indexes that investors use to predict future stock outperformance. This new metric, how AI-enabled a company is, has become as important as earnings growth or debt ratio. Investors are no longer just asking, what does this company make? They're asking, how is it using AI to make it better? But like all booms, This one comes with risks. First, valuations are getting stretched. Many companies have seen their stock prices soar simply for mentioning AI, even if their actual use cases are minimal. Analysts warn this could create an AI premium bubble, where enthusiasm outpaces fundamentals. Second, implementation isn't easy. Integrating AI into legacy systems is expensive and time-consuming. Companies need high-quality data, skilled engineers, and strong cybersecurity. And most firms are still figuring that out. Some projects will fail quietly. Others will expose vulnerabilities in privacy and data governance. Third, there's the labor question. AI promises efficiency, but it also threatens jobs. Many companies are investing in automation not just to innovate, but to cut costs. That means corporate America could face a backlash if the AI revolution starts displacing workers faster than it creates new roles. But despite the risks, the trend is unstoppable because AI isn't just about technology, it's about storytelling. On Wall Street, narrative drives capital, and right now, the narrative that sells is intelligence. Investors want to believe every company can become smarter, faster, and more efficient through AI. That belief is shaping the next decade of business strategy. CEOs, who once spoke about market share and growth, are now talking about data pipelines, neural networks, and automation efficiency. Even in sectors like construction, agriculture, and healthcare, industries not traditionally known for tech, executives are reframing themselves as AI-driven innovators. We're witnessing the blurring of categories. The old distinction between tech companies and everyone else is disappearing. In 2025, every major firm is now, at least in part, a technology firm. The real winners won't be those who simply talk about AI, but those who use it strategically to solve real problems. The companies that focus on measurable outcomes, lower costs, faster operations, better insights, will prove that AI isn't just hype, it's a new business operating system. For investors, that means looking beyond the buzzwords. The question to ask isn't who's using AI, but who's using it well. For executives, it's time to stop treating AI as a side project and start embedding it into the core of the business model. And for everyone else, employees, consumers, and policymakers, this is the beginning of a profound shift in how capitalism itself functions. Efficiency, prediction, and automation are becoming the new currencies of growth. Wall Street's obsession with AI might look like hype today, but just like electricity in the 1900s or the internet in the 1990s, it's setting the foundation for the next great transformation in business. In the years ahead, every company will either master artificial intelligence or be mastered by those who do.